Title: Navigating the Complexities of Bitcoin and Blockchain. A few thoughts for Nate's Canadian Prepper channel. Introduction. The digital age has ushered in revolutionary concepts like Bitcoin and blockchain technology, dramatically altering the landscape of finance, technology, and society. This YouTube comment aims to review these innovations, addressing their engineering fundamentals, economic implications, and societal impacts. Blockchain and Bitcoin engineering fundamentals. Blockchain technology, at its core, is a decentralized ledger system that has revolutionized data management and security. Bitcoin, built upon this technology, operates on a proof-of-work mechanism, ensuring transaction integrity and network security. However, these innovations are not without their challenges. Decentralization and security. The decentralized nature of blockchain provides robust security against fraudulent activities. It eliminates a single point of failure, making the system more resilient against attacks and corruption. Proof-of-work mechanism. Bitcoin's proof-of-work system requires miners to solve complex mathematical problems, ensuring the legitimacy of transactions and the creation of new bitcoins. This process, however, leads to significant energy consumption, raising environmental concerns. Scalability issues. Bitcoin and similar cryptocurrencies struggle with scalability. The limited transaction processing capability leads to slower transaction times and higher fees, posing a challenge for mass adoption. Innovations and improvements. Various advancements are available to address these issues, including the development of more energy-efficient consensus mechanisms like proof-of-stake, and Layer 2 solutions like the Lightning Network to enhance transaction speed and scalability. Economics of fiat versus blockchain. The economic principles governing fiat currencies and cryptocurrencies differ fundamentally. Fiat currencies, governed by central authorities. Fiat currencies are susceptible to inflation and can be impacted by political and economic policies. Central banks can print more money, leading to inflationary pressures. Over the last 6 to 8 years, countries like Canada, and in fact over 70 countries, have faced disastrous national debt waves and have used vast trillion-dollar-plus national debts to take wealth from the population and inflate associated investor networks via real estate, placing the world on the precipice of a potential consumer, private and national debt-caused global depression event, demonstrating the urgent need for the public to consider adoption of non-bank managed and non-state managed cryptocurrencies. Cryptocurrencies. Bitcoin, with a cap supply of 21 million coins, presents a deflationary model. This cap aims to prevent inflation, a stark contrast to the potentially unlimited supply of fiat currencies. Market volatility. Cryptocurrencies are known for their price volatility, which can be attributed to market speculation, regulatory news, and technological developments. This volatility raises questions about their stability as mainstream financial instruments. Regulatory landscape. The lack of regulatory clarity for cryptocurrencies adds to their unpredictability and poses challenges for investors and users. Wealth inequality in fiat and crypto. Wealth inequality is a pressing issue in both fiat and cryptocurrency systems. Fiat wealth concentration. A significant amount of global wealth in fiat is held by a small percentage of the population. This concentration of wealth often leads to economic disparities and social unrest. If memory serves correctly, it has been frequently cited in various reports and analyses that the top 1% of the world's population holds a disproportionately large share of global wealth. While estimates can vary, it's not uncommon to see claims that this group owns around or more than 50% of the world's wealth. Similarly, the top 10% of the world's population also controls a substantial portion of global wealth. While the exact percentage can fluctuate based on economic conditions and wealth growth in different parts of the world, it's generally recognized that this group possesses a significant majority of the world's total wealth. Mr. Canadian Prepper. The call for a hero extends beyond the realms of inflation protection offered by Bitcoin and other cryptocurrencies. The pivotal focus must shift to the safeguarding against wealth inequality within these digital assets. It is imperative that the hierarchy of importance in cryptocurrency projects be re-evaluated. Wealth inequality protection should be at the forefront, surpassing the traditional emphasis on inflation protection. Your unique blend of professorial insights, exceptional intelligence, and world-class presentation skills positions you ideally to spearhead this crucial discourse. Humanity stands at a crossroads, and with your guidance, there is an opportunity to navigate towards a more equitable digital future. Your voice could be instrumental in reshaping the narrative, prioritizing equitable wealth distribution models in the realm of cryptocurrencies, a change that could fundamentally alter the course of our digital economy and the destiny of humanity. Crypto wealth concentration. Similar patterns of wealth concentration are evident in the cryptocurrency space, as exist in the fiat space. A small number of addresses hold a large proportion of major cryptocurrencies like Bitcoin and Ethereum, mirroring the inequality seen in the fiat system. It is probably possible to find systems where a few individuals already own 90% of the currency supply of these type of cryptocurrencies, leaving only 10% for all of humanity for all of time. If people are tricked at this critical juncture, slavery will perpetuate for eternity, as existed throughout the history, both known history and unknown history. Potential for crypto-oligarchs. This concentration risks creating a new class of crypto-oligarchs, potentially leading to a power imbalance and perpetuating a master-slave dynamic in the digital currency realm for all future centuries. Fair distribution challenges. Ensuring a fair distribution of cryptocurrencies remains a significant challenge, with implications for the future economic landscape. Transparency and insider ownership in blockchain projects. Transparency and insider ownership are critical issues in blockchain projects. Need for transparency. The promise of blockchain is its potential for transparency. However, many projects lack this, leading to potential market manipulation and centralization of power. Insider ownership risks. Significant insider ownership in many blockchain projects can lead to decisions that benefit a select few, undermining the decentralized ethos of the technology. Regulatory challenges. The absence of regulatory oversight in the blockchain space exacerbates these risks. Without transparency requirements, insiders might have undue influence over the network's direction and security. Mining centralization. Mining centralization is a significant concern in cryptocurrencies like Bitcoin. Large mining pools and corporations have amassed significant computational power, potentially giving them undue influence over the network. Large mining pools. The dominance of a few large mining pools in Bitcoin mining raises concerns about the potential for 51% attacks, where a single entity could control the majority of mining power, and manipulate the blockchain. Environmental impact. The substantial energy consumption of large-scale mining operations, especially for cryptocurrencies that use proof of work, is a growing environmental concern. The environmental impact of large-scale mining operations, primarily due to large energy consumption, is another growing concern. Centralization versus decentralization. This centralization contradicts the decentralized nature of blockchain and poses security risks, highlighting the need for more sustainable and decentralized mining practices. Global awareness and fair distribution. The rise in global awareness of cryptocurrencies offers an opportunity for fairer distribution. Increased public knowledge. Greater understanding of blockchain and cryptocurrencies can lead to more equitable participation and investment. Fair distribution practices. Ensuring that new blockchain projects distribute their supply in a transparent and equitable manner is crucial for avoiding the pitfalls of past distribution models. The demarcation point in cryptocurrency awareness. The rise of cryptocurrencies like Bitcoin brought about a new era in finance, but it also created whales, individuals or entities that acquired large amounts of cryptocurrency early on, often before widespread public awareness. This early accumulation has led to significant wealth concentration, reminiscent of traditional fiat systems. An essential aspect to discuss is the demarcation point. When did the general public become genuinely aware of cryptocurrencies, and how did this timing affect their ability to participate fairly in these markets? Fairness and supply issues. The issue of fair distribution in cryptocurrency is closely tied to how and when the supply of these digital assets was made available. In the early days, a significant portion of the total supply of major cryptocurrencies like Bitcoin was acquired by a small group of early adopters, often before the public had a chance to understand or access these technologies. This early distribution model has led to an uneven playing field, where new entrants to the market are at a disadvantage compared to early holders. Modern projects and equitable opportunity. The landscape, however, is changing. With increased global awareness and understanding of blockchain technology and cryptocurrencies, newer projects are emerging with more equitable distribution models. These modern projects present an opportunity for a wider demographic to participate from the outset. It's crucial to highlight how these projects differ from their predecessors in terms of their approach to distribution and how they may offer a more level playing field for new participants. Public education and participation. Public education plays a pivotal role in ensuring fair participation in the cryptocurrency space. The more informed the public is, the more equitable the distribution of these digital assets can be. Highlighting the importance of timely and accurate information can help potential investors make informed decisions, contributing to a fairer distribution of wealth within the crypto ecosystem. Blockchains to investigate: Ethereum, Cardano, Hashgraph, Solana, Algorand. In response to the challenges faced by traditional blockchains, newer platforms like Ethereum, Cardano, Hashgraph, Solana, and Algorand offer solutions. These platforms aim to address some of the centralization and scalability issues prevalent in older blockchain systems. Cardano utilizes a proof-of-stake mechanism, reducing energy consumption and offering a more egalitarian participation system. Cardano uses a proof-of-stake (POS) consensus mechanism, which is more energy efficient than Bitcoin's proof-of-work (POW) and less prone to centralization. It also focuses on a more egalitarian network participation system, potentially reducing the risk of power concentration such as crypto oligarchs. Hashgraph offers high throughput and fairness without the need for proof-of-work mining, focusing on a governance model that prevents centralization. Hashgraph claims to offer high throughput, fairness, and fast consensus without the need for extensive proof-of-work mining. Its governance model is designed to prevent any single group from having too much control, promoting decentralization. Solana, known for its high transaction speed and scalability, achieved through a combination of proof-of-history and proof-of-stake consensus mechanisms, and high hardware systems that leverage personal desktop computing architecture for maximum decentralization and performance. The best of both worlds in decentralization and performance balance available at the individual level. While it offers improvements in scalability and energy efficiency, there are some concerns about the network's centralization due to the computational requirements for validators. Algorand focuses on speed and decentralization, presenting itself as a scalable and efficient alternative to traditional blockchains. Adopting a diversified blockchain strategy. To mitigate the risks associated with wealth concentration that can imperil humanity into a future to slavery, and to protect against market volatility in the blockchain space, adopting a diversified strategy of holding at least 2 to 4 cryptos is advisable, a type of minimally diversified crypto portfolio. Combining assets, a mix of traditional assets like gold and various top public utility, open source, low insider investor, with fair distribution. Cryptocurrencies can offer a balanced financial ecosystem. Benefits of diversification. This approach reduces the reliance on any single asset class, potentially stabilizing the overall portfolio and mitigating risks. When the portfolio is evaluated as a whole, the portfolio of 2 to 4 cryptocurrencies is then resilient to confiscation, manipulation, inflation, and the risk to humanity from everyone owning a cryptocurrency that was poorly distributed and had causes wealth concentration risk and slavery is reduced vastly. Conclusion and recommendation for Nate's video. Mr. Canadian Prepper, with your platform's reach and influence, you have the capacity to shed light on these often overlooked aspects of cryptocurrencies. By focusing on a timeline of public awareness, supply issues, and the evolving nature of cryptocurrency projects, you can help guide a discussion that emphasizes fairness and equitable access. This perspective is not just about financial investment. It's about fostering an inclusive digital economy where wealth distribution does not mirror the inequalities of our current systems. Given these insights, it would be beneficial for Nate's video to feature such points. Highlight the importance of transparency and the risks associated with insider ownership in blockchain projects. Discuss the implications of mining centralization in cryptocurrencies like Bitcoin. Explore newer blockchain solutions like Ethereum, Cardano, Hashgraph, Solana, and Algorand, focusing on how they address issues of centralization, transparency, insider ownership, distribution practice of tokens, and how many tokens are left to distribute to the masses, and scalability. Such a video has the potential to significantly contribute to the public understanding of Bitcoin and blockchain. In addition, it could be very helpful to not only the prepper community but to the public at large to discuss some of these issues with some influencers knowledgeable about crypto and running crypto channels. Examples include Ivan on Tech, Coin Bureau, Charles Huskinson, Lehman Baird, Silvio Macaulay, and Preston Pysh. However, it might be hard to get an interview with them. By presenting these complex topics in an accessible manner and involving leaders of crypto community in the discussion, the video can foster a balanced and informed debate, enriching the overall understanding of these critical technologies. At Skills Gap Trainer, our team doesn't have the time at the moment to examine all of this technology. These reflections, it is our hope that interested parties can discuss more on the internet for the benefit of all, so we do not repeat past mistakes or allow others to make us make mistakes for their interest. However, if you ever make a video like this with crypto experts, we would really welcome it and appreciate it to post it and embed it on our website for this article. Thanks.